Good afternoon, and thanks a lot to all the participants and our panelists with Browder, Stefano Caselli, and Sylvie Goulard. Bill Browder is an entrepreneur and political activist. He's a co-founder and CEO of Hermitage Capital Management. Stefano is Dean of Bocconi School of Management and Professor of Finance and Banking. Sylvie Goulard is Professor of Practice in Bocconi School of Management and former Ministry of Defense in France and Vice Governor of Bank of France. So I am very honored to have you as part of this roundtable, and we'll organize this webinar in two parts. The first part will be just a discussion and answering some questions about the uncertainty that we are experimenting these days. I think that the war of duties that we are seeing now, and also the wars in Ukraine and in other parts of the world, are driver of uncertainty for companies and institutions. And it's difficult to navigate this kind of uncertainty and to understand what to do in the present, but in particular also for the future. So I asked to Stefano to open the table, just trying to tell us what is the key role of finance, banking, as a growth driver in this uncertainty scenario that we are living.
Thank you, Sandro. Great pleasure to join the webinar. Using the angle of finance, I would like to start from some key numbers that are very useful to understand what could be the role of finance. Not to predict, I don't have the crystal ball, we don't have, but to understand, the fundamentals. If I give a look to fundamentals, they seems to be very, very solid, and something I always remember is that compared to the amount of GDP we have in the world today, which is roughly $110 trillion US, the amount of wealth is without any precedents, and some numbers, so 160 trillion, it's liquid equity, roughly 200 is liquid debt, 20 trillion is private equity, 120, 30 is cash, more than 400 is real asset, where the most important is real estate. So gigantic amount of wealth, where the cash, the liquidity available is bigger than the amount of GDP. So these numbers are useful to say, well, two things. The first one is that, the power of wealth is without any precedent. As Mark Carney mentioned in his fantastic book, Values, is a decision of investors to give a value or not to any kind of assets. And so really is without any precedent. And this is in a certain sense, I don't want to say optimistic, but is a potential. There is a potential. It's much better to live in a world where the amount of cash and wealth is gigantic, rather than to live in a world where the amount of wealth is nothing. So there is a potential. And the other one is the role of the parachute of cash. We can debate for hours about the value of multiples and the price of shares all around the world, and the debate if it's too high or not. What is true is that the amount of cash is so high that it's very difficult for investors to exit in this moment. And if I combine this number and to see, okay, what could be the role of finance throughout uncertainty, let me say the role of finance is related to three different, concepts that are, happening. And the way in which you are going to combine is going to affect, I don't want to say the destiny of the world, but for sure, the impact in the coming years. What are the three trends, the three key aspects? The first one is the concept of long term. We desperately need a return in long term because of demography, because of welfare, because of guaranteeing insurance business. So we need return long term. And this is positive because it means at the end of the day, a portion of the amount of wealth we have has to be invested in something generating return long term. And it is theoretically positive. The second is related to the concept of equity. So we need more and more equity because to run investments, we need equity. To consolidate many sectors, we need equity. To have more startups, which is the future of the world, we need more equity. So equity is knocking to the door, even if the temptation of debt is always there. And we see many states issuing more and more debt. So it's a temptation, it's a very, let me say, comfortable way to raise money using debt. And the third is sustainability, where sustainability means to combine value we need, return, with values. And is not only driven by ethical principle, but it's related also to the fact that in the business environment, gaps are increasing. You choose any kind of angles, from water scarcity to food scarcity to pollution. Gaps are increasing, and gaps are progressively destroying the business environment which we stay. And if we do not address these gaps, it's going to become more difficult to generate return long term. So value and values. So three pieces of the puzzles: long term, equity, and sustainability. And the question we have, and this is the big question for advisors, for financial institutions, for regulators, but also for individual decisions, is how do we combine these three pieces of puzzle? We are ready, let me say, to vote in favor to have much more long-term, much more orientation to equity, and much more, let me say, desire to play with sustainability. It could be possible thanks to the big amount of cash and wealth we have, but it is a decision throughout, financial markets and financial intermediaries. Or we decide to do something different, and we're going to vote for something different, which is a short-term return, to go to the casino of cryptocurrency. It is another way, let me say, to use our financial resources. So let me say the way finance, and coming back to your question, Sandro, is going to support our way to navigate in uncertainty. It's related to our capability to combine in a quite effective way the three pieces of the puzzle: long-term, equity, and sustainability. But again, as I said, it is a decision we have to monitor, and we have to support, let me say, every day, with our voice, throughout rules, and throughout, let me say, the debate we are playing, all together in this afternoon.
Thank you, Stefano. And I think that having a clear the puzzle, with different pieces and different combination is already a step forward, to understand the complexity and uncertainty that we are living. But there are many aspects of our environment that could change, we can say, very soon, as we hope. And in particular, there is an area that is the Ukrainian war, where there is a big question mark. And on this regard, I would like to ask to Bill Browder He has a great experience of finance management in United States, UK, Russia, and now putting together a very complex relation at worldwide level. And I would like to ask him if he could help us, in understanding a little bit more the role of United States and Trump in trying to find a solution to the Ukrainian conflict.
Sandro, thank you for that. Stefano, great to see you, and Sylvie, and I don't see the rest of you on there, but good to see you all. I graduated from Stanford Business School in 1989, and that was the year that the Berlin Wall came down. And I came from a very unusual family. My grandfather was the head of the Communist Party of America for 15 years. And so in my rebellion, I became a businessman. And I said, since the Berlin Wall has come down, I'm going to try to become a capitalist in Russia. And it was an interesting moment for Russia and for the world, because we went from a Cold War to a situation where there was no conflict at all. And I started this business, and it was all very interesting and exciting until it wasn't. But one of the first things that happened both in Russia and in the rest of the world was something which was called the peace dividend. And the peace dividend said that all this money that we were spending on defense because of Russia and or the Soviet Union and the Cold War, we don't need to spend on defense. Defense spending is actually has a low velocity of money. You put it in and it kind of disappears. And if you put that money into other things, there's a much higher multiplier effect, and it becomes a much more greater economic gain. And so for a long time, we all enjoyed the peace dividend. And I would argue that a lot of the great things that have happened over the last 35 years have been a result of not having to spend all that money on defense and on war and on all this other stuff. And so the problem was that we never really kind of got to grips with who we're dealing with. And one of the things I discovered as the largest investor in Russia was the level of corruption in the country. Russia, we all sort of know that there was corruption there, but actually seeing it and seeing how bad it was really opened my eyes to a much bigger problem than most other people realize, which is that it's not just paying off a traffic police guy who stops the car. Corruption is basically the main business of Russia. And when I say that, I mean that every person who goes into government, whether it's that traffic officer who stops your car, right up to the regional administrators, to the federal government, to the ministers, to Vladimir Putin, are all there with one purpose and one purpose only, which is to make money. And as a result of that, almost all the money that should have gone into the country has gone into the hands of a small number of powerful people, oligarchs and senior officials. And I estimate that over I guess now we're talking about 26 years since Vladimir Putin came to power, he and about 1,000 people around him have stolen $1 trillion from the Russian state. And that was money that should have been spent on public services, on hospitals, schools, roads, et cetera. It was spent on private jets, yachts, mansions, et cetera. And as a result of that, it became clearer and clearer to Putin and those people around him that at any moment in time, if the wrong decision was taken about almost any little thing, the Russian people could rise up and they could basically string Putin from a lamppost. And so Putin, who's a very scared little man, and you can sort of see images of his fear at those long tables he used to sit at when he would invite foreign leaders to come because he was so scared of COVID at the time. He's a scared little man, scared of being strung up from the lamppost. And so he said, well, what do we have to do so that people don't get angry with me about all this money that's been stolen? And it comes right out of Machiavelli 101. You find a foreign enemy and you start a war. And so the war in Ukraine is not about NATO. It's not about Putin's vision of a grand imperial Russia. It's a very simple reason, which is that it's a little man who's scared of his own people, who wanted a foreign distraction. He started the war. And so, coming to your question, what can Trump do about this? Can he bring peace? And the answer is no. Trump can't bring peace for one simple reason, because there's nothing that he can offer Putin that will allow Putin to feel calm, that he's not going to have his own people come for him and string him from a lamppost. And I should point out that it's not like Putin can just retire. He can't retire. If he were to retire, they always go after their former leaders, particularly one as brutal and corrupt as he was. And so Putin needs this war to stay in power. There's nothing that Trump can offer him to alleviate his fear of being killed by his own people. And Putin is a psychopath who's ready to sacrifice as many men as he needs to. It can be 1 million, it can be 2 million, it could be 10 million in order for him to stay in power. And so, we're all watching it's almost like a reality TV show, what's going on with Washington and Russia and Ukraine. But it's all really nonsense. It's all just like fantasy football, coming up with a 28-point peace plan, because Putin, even the peace plan which was presented, which was basically drafted in Russia, is not a peace plan that Putin would accept, and he surely won't accept however revised that peace plan has been in the last few days. And so we're just watching all this stuff. And maybe Trump is actually using this to his own advantage, because guess what? Nobody's talking about the Epstein files right now. They're all talking about Witkoff in Russia. And so I'm afraid that that nothing is going to be resolved by Trump in the next few days. And I read a very interesting article today, which brings it back to the global economy point, which was an analysis was done to say, how much is Europe going to have to spend in order to keep on supporting Ukraine if no peace is gotten, and the number is somewhere between 600 and 900 billion dollars is going to be the price tag to Europe of supporting Ukraine, which sounds like a lot of money. But then this study went on to say, how much is it going to cost if Ukraine is to basically surrender on the terms that are being pushed on Ukraine right now? And then Europe has to shore up its borders, and the number is between 1.3 and 1.6 trillion dollars. And so it's still a much better deal just to be supporting Ukraine in this situation than it is to allow them to fall. Thank you.
Thank you. Thanks a lot, Bill, for your very clear vision. And we can say that the situation will probably be more and more uncertain in the future, also considering different, let's say, conflicts that we have worldwide. Ukrainian is very important for European, but there are many other situations that create uncertainty and we can say low level of trust in the business. Just to have an example, I heard by some managers and entrepreneurs that they had to close or to reduce the production in their plants because the difficulties in finding some raw material or some component, because the duties from the United States was so relevant and so effective that many suppliers decided to sell all the production to the United States before the duties. And for this reason, some plants had in Europe and in Italy had problems in finding sourcing. And I want to ask on this side to Sylvie, thanks to her experience in the defense area, because the big experience in the government of France, but also on the finance side, as vice governor of Bank of France, and also as member of the European Parliament in the past. What is the what are the possible, we can say, reactions, the possible strategies of companies in a so complex and uncertain geopolitical scenario? We talk a lot about resilience, but how long they have to be resilient to succeed? Please.
Thank you, Sandro, and thank you so much for inviting me in this great round. Thank you for being so candid, Bill. It's a pleasure. I'm actually in Bavaria for the retreat of the Munich Security Conference. So I'm just making a break from the discussions, and I will make 4 points. The first one is that I would say to all CEOs, be prepared for all geopolitical scenarios. The only certainty is uncertainty. Maybe, as Bill said, Trump is not in the position to end the war. Maybe he will. But in this case, it would mean that for Europe, it's a deal without us, and it's not very reassuring. The same for China. We don't know exactly if we'll see a confrontation, or if what we will see is the kind of we divide the world, spheres of influence. You don't attack me, I don't attack you, but whatever happens to the others is not a big issue. So first, be prepared for very weird geopolitical scenarios, at least weird if you compare with the world we were used to be. And here, talking, I suppose, mainly to an Italian public, I have the feeling that Italy is a little bit behind in terms of awareness on where we are. We are living really in a changing world, and yesterday world will not come back. It's not a crisis where we will go back. It's something completely different. Second point, I would say reach better and think about destructive creation. We have strength in Europe. Many companies are making profits. But we may well not be where we should be, and above all because of tech and the change that tech is introducing in production, in information, in relationship with voters, clients, consumers, whatever, is so huge that we are just at the beginning and we cannot exactly figure out where we will be. But one thing is sure, for example, as you can imagine, there were discussions on automotive. What is the future? Is it EV? Is it less emitting combustion engine, etc.? But we cannot rely on the past successes. Even the most successful companies in Europe should realize that China is turning itself to the internal market, that we are in a world of tariffs, and where it's not that we move from the status quo to a new environment. We are entering a very uncertain time. The third point is don't forget horizontal issues, because I'm struck by the fact that we talk about Russia, we talk about China, but as you said, Bill, for example, corruption, or the very high degree of concentration now in companies and their influence on political decision makers is something completely new with the past. The past, we were supposed to live in a rule-based order. The same for climate, that is going, even if you are not an ecologist, climate will have an impact on, for example, the productivity of your workers during the heat waves, or because you will need water and there is water scarcity. And all this may also create some new conflicts. So you need to hire the right people to face these specific issues. And of course, I don't want to be catastrophic, but the fact that quite in all circles, we put geopolitical issues first, leaving apart sustainability and climate is, in my opinion, a big mistake, because we need to think in terms of resilience, and resilience is one, and it's one issue. And very last point, of course, is very basic, but diversify, distribute the risks, look at your value chains, don't put all your eggs in the same basket. Make sure that maybe you have shorter value chain, that you are based in countries that have a little bit more political stability than others, etc., etc. So it's not just about costs. It is cost and a stable environment, capacity of the people to deliver in the middle and long term. These are, once again, very new environment. A last word on politicians. I think that the idea of reading Schumpeter should be also something the politicians do, because above all, I can tell you, in international discussions, the European Union is not seen as fit for purpose. Thank you.
Thank you, Sylvie, for these insights, very precious, really interesting. As I mentioned at the beginning, this was the first part of the roundtable. We have a second part now, starting now, when we can start a discussion also with the participants. So if you like to make questions to the participants, to the panelists, please use the chat. As you know, this webinar has been recorded, will be recorded also for the second part. This is just for privacy issue. And as you know, you can use also the subtitles for the translation in Italian or other languages. Sorry for this operational communication, but I received on my side this kind of communication. So I want to start the second part of our webinar just to think about the future. Now we have seen that in the meantime, if the participants they have any kind of question, please write in the email. I can see the chat and I can make a question to the panelists. I ask and I start with Stefano. We talked about the different pieces of the puzzle and how we can combine in terms of architecture these different parts, and from also the speeches of Bill and Sylvie, we have seen that the future will be more and more uncertain, probably. In this scenario, how do you see the future of finance role in the economy? Will be the same than the past, or you see some new elements to understand? For example, we talked with Sylvie about risk and insurance in finance. It's very important to cover these risks. How do you see this area in the next 2-3 years?
No, thank you, Sandro. And I believe that there is one aspect which is to see the positive angle. As I said before, the amount of financial resources without any precedent. And especially if we talk about the European playground, what I try to mention every time I write on the newspaper is that we have an extraordinary amount of savings. For example, in Italy, $6 trillion is the amount of financial assets in a household. It's unbelievable. It is a natural resource. And we have to decide if we want that others are going to manage this natural resource or are going to use by ourselves. So not only as Italian, but as European, we have basically to put very quickly into the political debates if we are really able to use these financial resources and the financial markets to generate growth in our playing field, which is Europe. It is really the key question and the key point using the angle of finance we have to debate about. It is really, the game changer. If, as European, we'll be able to use financial markets to multiply and to create growth, Europe in this case can have a role. If you are not able to do that, combined with the many question marks and the risk that Sylvie mentioned before, obviously, the downsides will be really unbelievable. But it is really the key point. We are going to let me say, debate in the next month. I still believe that potential of Europe is concrete, is achievable, but we have to start exactly from this point, to use the financial resources to create development, first of all, for our countries.
Thank you, Stefano.
And sorry, Sandro,
Sorry.
to add another topic, because we always debate together with the Sylvie about that. Sustainability is a key point. On the one hand, it's very clear there is this perception of losing the momentum. That would be a tragedy. But on the other hand, a part of finance is still there. So sustainability is not just simply a nice label. It's something, to protect the value we are going to generate. If you play an insurance company, all managers have clearly in mind that, climate change is not just simply theory. It's something very concrete. And finance is reacting to protect the value, for example, of insurance companies. I'm not here just simply to say something nice, but to say, an angle of finance is working very hardly, let me say, to deploy the concept of sustainability.
Thank you, Stefano. I think also many companies they have to show, to demonstrate their sustainability activities and investments to receive money from the banks for also having better conditions and interest rates. So I think that the role of finance is really key, and also considering this huge amount of money that we have available, this will be a key element also for the future of the sustainability in this very strange period, we can say, in terms of on this topic. I ask the same question to Bill. We have seen the situation in Ukraine, in Ukraine in this moment, and we see in the future very few probabilities to have a solution. If we see this very complex period, the stock exchange markets, we see not bad results, considering the level of complexity, the level of uncertainty. What do you see on this side? If you could tell us something about the next 2-3 years, if Trump, if the United States, they are not able to solve the Ukrainian conflict, what will be the future on that side and the impact on finance at European level in particular?
Well, as Sylvie said, you kind of have to prepare for everything. I mean, there's just so many different permutations on how markets and situations can evolve. I mean, putting aside Ukraine for a second, you've got Trump, who's a real estate developer, and so as a real estate developer, he's in his career, he's always been in the business of borrowing money to buy real estate. So when you borrow money to buy real estate, what do you want? You want interest rates to be low. So Donald Trump is saying, I want interest rates to be low. Then you have the Federal Reserve on the other side, who's saying, well, it's our job to be independent, not to be told by any president what to do with interest rates. And with inflation not going down as much as they would like, they're saying, well, maybe interest rates should stay higher. And then you have Trump's approach towards institutions, which is that norms and institutions don't really matter. And so he's now threatening various different things against Jay Powell and so on to lower interest rates. And even though he hasn't been able to fire him, it's hard to imagine that as a central bank governor in America, you're not affected by that. And so I can imagine a scenario where interest rates do get lowered. And if they do get lowered, in a scenario where they shouldn't be, then you have the potential for inflation to become a big problem again. And so it's really hard to know. I mean, on one hand, if you lower interest rates, markets will go up. That's what happens. People borrow money to speculate. People can buy things that you lower your discount rate on future cash flows. But then if you have inflation, we all saw what inflation did. And of course, inflation isn't just a financial problem. It's a huge political and social problem because you never raise wages as much as you do prices. And then all sorts of people get angry and then they start to demand a change in government. And it could be a change in government from left to right, or it could be a change of government from right to left, depending on where you are in the world. And so it's a very tricky situation to be an investor. And of course, on top of that, you have this whole AI thing going on. It's pretty remarkable if you look at the performance of the U.S. stock market. You say, "Wow, it's going really well. The S&P 500 is booming." But if you take the S&P 500, I think 30% of it is the Magnificent Seven, who are all one way or another benefiting from this whole AI boom. And if you were to take those out, the performance of the S&P is actually not all that fantastic. And so you have then this AI boom which is going on, which is in a certain way dependent on lower interest rates. The lower interest rates you have, the more you can then discount back cash flows into very far into the future, and they still have value. And so all this AI stuff is going up, and the AI because these companies that are hard to even value then enter into contracts with other companies that are hard to value. All of a sudden, you get this crazy inflation, totally irrational inflation in the value of these AI stocks. And of course, if that were to collapse, which it probably has to do at some point, I don't know. I mean, it's hard to. I mean, I'm a huge believer in AI. I love using it. I use it every day. But it's hard to even imagine that these companies can support the valuations that they have. And so you end up, if you have an AI collapse, even if most of the companies in the S&P haven't been going up, they'll probably all go down. That's how it always works. And so all these factors together make it a very uncertain world. But at the same time, what you don't want to do as an investor anyways, is keep your money in cash because you have inflation. Even if it's low inflation, you still have inflation. So you're losing, between 1% and 4% a year just by holding cash. But if you put your money into the markets, then you could have this, and you could make money in the short term, and then you have a spectacular drawdown because of some either interest rates having to go up in the future because of inflation or because the AI bubble collapses. And so it's a very treacherous time. And of course, on the back of all this, you have a bunch of people who aren't participating in all this. And most of the people of the world aren't participating. And so you have this unbelievable disparity of wealth. And what's that going to do? In every country where you have it in most countries, you're going to have these wild swings of political pendulum. And so, this Mandami in New York is not just a unique thing to New York. It's the pendulum swinging back from all the anger of what's happening just in the last year with the current Trump administration. And of course, you can see the same thing in most countries in Europe. And it can be a left-wing swing, it can be a right-wing swing, depending on who's in power at the moment. So, I mean, it's impossible to make any predictions, and it's impossible to be the holder of financial assets trying to figure out what you want to do, because almost anything you do is fraught with pretty spectacular downside risk any way you play it.
Thank you, Bill. And I think that as Sylvie said, probably the only certainty is that we are in a very uncertain and unpredictable situations and scenarios. And Sylvie, do you want to add something to this consideration of Stefano and Bill about the future that we can see, and how, as companies or institutions, we can face it?
Yeah, no, first of all, what Stefano said on finance is very important. And I'm going again to take the European perspective. In Europe, we have divided different tools that usually are in the hands of one government in a state. The currency and the monetary policy on the one hand, or trade policy, these ones at European level. And the other ones, economic decisions, social, tax, and even more diplomacy and defense remain at national level. So these unbalanced, we observed in the last months that it does not work. Not only it is uncompleted, but the fact that we were not organized to take care of our defense ourselves, or mainly with huge differences from a country to another, made us target of blackmail from the Trump administration, because the discussion on tariffs was not on tariffs. It was the discussion on tariffs with the people guaranteeing our security, at least until now. And of course, the eastern part of the European Union put a lot of emphasis in keeping the guarantee of the US and doing everything. I don't know if it is the best way to be seen as credible in DC, but in any case, it's the decision that was made. And for companies, what does it mean? It means that either they understand that they need to put pressure on the political class to make sure that we take some decisions. For example, increase the number of military procurement in Europe in order to make sure that we are interoperable and that we reach a certain scale with economies of scale. Or a lot of public money will be spent in a fragmented way by governments not coordinating, and this is a waste of public money that we need for reskilling the people in the AI age or for whatever social or environmental reasons. So we are really facing as a society, and I insist, it is not just something for politics. It is how do we shape the future? In the past, in some of the big, when we leapfrogged with della and some others, business was behind the European integration. Now people have the feeling that they take more short-term decisions and politicians make their decisions. But if we accept these nationalism, this emphasis put on very narrow, for narrowly defined interest, the result for the whole area will be that we will be poor. Because if we don't use the money, because Stefano is right, there is a lot of savings, but the fact that you are very rich does not mean that you use your money and to go away. So we should make everything to make sure that the institutional framework and the choices for spending more money are made in a way that is really creating a boost, that we can benefit from the spillovers of defense investment, for example, on R&D, which is one of the big force of the US, because they have a very high level of positive consequences of the money they put for military. So there is a lot of work to do. We have the money, as Stefano said. For example, in Germany, where I am right now, it is absolutely clear that they are very determined to change completely their orientation, which is good news for Europe as a whole, as long as the decisions are not made in such a fragmented way that at the end we spend much more than what we could spend together. It's not an easy stuff, but it is absolutely indispensable. So, of course, certain areas like defense are the immediate beneficiaries, but many others could figure out what kind of money they would receive if we invest in a smart way on our security.
Thank you. Thanks a lot, Sylvie. And it's really relevant to understand your point that this is not just a political problem, but is a problem and an issue for the society. This is, in my view, is a key point. sociologists in general, they tell that when the uncertainty, the risk is very, very high, we need trust. Because trust is a shortcut to try to manage and to face uncertainty and risk. When the environment, when the situation is very clear, the information is available, we don't need trust. Trust is very important in a situation of uncertainty and risk. So this is the moment of trust. Probably this is one of the most relevant times now that we had when trust is so relevant. But what we see analyzing the trust index of different institutions is that there is a general decline. No trust institution, trust in Europe, trust in government, trust in political parties, trust in banks. There is a trend of declining trust, and this is very worrying in my view, because high level of risk and uncertainty on one side and low level of trust on the other side means that the situation is very, we can say, dangerous in some sense, and very, there are no point of reference. The last question I ask you, if you have to think to some elements in which we could invest in terms of trust. Now, for example, I'm a marketer, I study marketing, and we are measuring the level of brand trust. There are some brands that are growing in incredible at incredible level because the very high uncertainty in the environment. What you could see as an area, an institution, an object, on which to trust for the future to compensate this complex and uncertainty situation. Stefano.
It's a great question. It's very difficult to reply. Let me say, I'm a great supporter of the concept of Europe, and paradoxically, in this moment in which it seems to be something a bit weak, I believe that the concept of trust you mentioned has to be built around this concept of Europe. Explaining, in any way that is something not only ideological or, let me say, romantic, but is something very concrete to give a better future, not only to next gen, but also to ourselves. This is, let me say, the angle you have to push, you have to explain, not only using data that could be a bit sophisticated, but really explaining, in a simple way that Europe matters, and it's the best way to create trust. And let me elaborate a bit on that. I still believe that, something could happen on that. As we know, when the risk became a very high, Europe and European countries are able to do unbelievable things, and we don't need, let me say, to have all the 27 countries together, because in this moment, we see how very small countries in terms of GDP has honestly an unacceptable veto power, and this is the problem of Europe. But I strongly believe that a group of some countries can, take decision, merging much more, their not only institution, but their organization. A small signal is related to what happened in Germany, where Deutsche Börse said a couple of days ago, okay, we can discuss about a merge with Euronext, is something that could help, let me say, to create, a stronger platform. And, it could help to add another mile and another mile. I strongly believe that we have to work on trust using, the concept of the European angle, which is something very concrete.
Thank you, Stefano. I totally agree on your view. The goal is very clear. Probably the process to get this goal is not full clear at the moment. But Bill, what is your view on this?
Well, I'm going to say something that will sound counterintuitive and perhaps controversial. But so we used to live in a world where there were institutions, mainly media institutions, that everybody trusted. You know, when you read the New York Times or the Financial Times or whatever, you know, that was the truth, and they kind of had a monopoly on the truth. The editor of the New York Times was one of the most powerful people in the world because they were the guardians of what was going out and what was relevant, what was newsworthy. And then the internet exploded. And actually, in my own situation, when I was fighting with the Putin regime, and I had stories to get out, I was always very frustrated with the New York Times because they were curating what the news was, and if it wasn't newsworthy, then they wouldn't put my story into the paper, and then it would basically nobody would know. And then I discovered YouTube, and I started making these videos, and then the videos bypassed the New York Times, and they went viral, and people were like, and I thought, wow, the internet is so great. And then all of a sudden, the bad guys took over the internet. And everything is, you know, what's true, what isn't. And the politicians, the bad politicians, the nationalists and the populists started making stuff up. The Brexit campaigners and the MAGA campaigners just making stuff up. And so now we're in this world where nobody knows what's true. And nobody reads the New York Times, and everything you can see on the internet or on social media is maybe true, maybe false. And everyone is just, it's completely created a cesspool of distrust. But so here's my thing though. And so like Twitter, or now X, was like one of the centers of this cesspool of distrust. And then all of a sudden, in the last few months, all these AI tools have come out. And so I'm not a huge fan of Elon Musk, the way he, his opinions and so on. And I thought Twitter was really kind of ugly and awful. But then he put on his X site his AI tool called Grok. And so every time I see a tweet, which I think is interesting, I ask Grok to analyze it. And this AI thing just spits out the truth. It just it looks in all different corners of the internet and says, this is what happened, and that's what happened, and here's the numbers, and blah, blah, blah. And I believe that with AI, all this misinformation and bullshit and all this kind of stuff, which is just being thrown at everybody, is going to be basically put to the side, because you can just press a button and find out what the truth is, because all the truth is eventually out there. And I think that could actually be bringing us back to normalcy, because just with the press of a button, with one button, you can actually see what happened. What, was that post real? Was it false? Was it, is it biased? What's the truth? And so I'm actually believing that AI, as much as people are all afraid of AI, is actually going to bring some trust back into the world, where truth is actually important, and those who are the purveyors of truth are going to be the ones that we rely on, and those who aren't are not.
Okay, no, but I think that AI could be an incredible booster, to create trust, but in the same time, be a tool to create a sort of trust facade, sometimes, and so it's important to understand the trust signals and to have tools that are reliable. To define and to verify the real level of news or context. Sylvie, what is your view from your perspective?
Maybe just one short remark, Bill. I would be very happy if it was not biased. But I'm not a specialist of AI, but as a woman, I can tell you that I'm very, very worried, because AI is using data someone is given to AI. And I hope that maybe in a second stage it will improve. But right now, I would not take everything that AI is saying for not only the truth, but there is also the a question of diversity of points of view, but it will be for another debate. No, to conclude, in my opinion, it's very difficult at that time because we need at the same time to be very ambitious and very humble. Very ambitious because we have lots of decisions to take that have an impact middle term, long term. The way we use the money we have right now, the last month, years, I don't know, we have before some forces could take power in some European countries, etc. And what can we do to avoid this? This is huge, and at the same time, if we are where we are, it's because we made some mistakes as well. I mean, we did not prepare. I remember the time where all central bankers were saying, yeah, you need to repair the roof when the sun is shining. Well, nobody did. In France, we have a very, very worrying financial situation. In Germany, they have spent decades not investing in their security, and elsewhere there are other problems. So I don't want to be too negative. Many things are feasible, and the best lesson we can get from Ukraine is that at the end, when you are in front of necessity, you become much more creative than the fat cats we are right now. And maybe this pressure from outside, I hope it will not be as tragic as a country in which bombs are falling and the children are taken away to their parents. But at least if things become more serious, if there is a certain gravitas, I hope it can create a little bit of a reaction that puts us in front of our responsibilities. So let's hope for that.
Thank you, Sylvie, also with this last sign of positivity for the future. And I want to thank you all the panelists, Sylvie, Stefano, and Bill, all the participants and the staff of Economia Management for the organization of this webinar. Thanks a lot, and see you later. And you will be the opportunity to watch the video of this webinar on the website of Economia Management. Thank you.
Bye.
Thank you. Bye. Bye-bye.
Bye.